Schroders are the investment partners for trusted Novus Bank, powering their discretionary portfolio management services.
The event was a success from our perspective. The room was fully booked, as it is every year. As I mentioned yesterday, this is the third year now on the trot that we have Schroders join us for this seminar, and we will continue to do it going forward. It's clear that our customers and non-customers want to see this every year because Schroders is a hugely important relationship for the bank because it's chaotic. We know policy decisions by central banks. We know technology is advancing faster and faster as the world becomes more complicated, and we need a partner like Schroders to be able to untangle that chaos in a way which, as you mentioned yesterday, Stuart, it becomes a probabilistic analysis. Nothing's ever certain, but that assessment and taking decisions based on best informed decisions is the way forward, and that's what Schroders does for us as a key partner for the organization.
The big question investors are asking is whether the trend in global resilience will continue in light of geopolitical risks and policy tensions.
Yes, so a lot of people are concerned about global growth at the moment, Ros, and partly because of geopolitical risk. So the first message is you can't invest ahead of geopolitical risk. It changes very rapidly. That was our first message. Our second message was that actually we are more confident about global growth into 2026, 2027 than many commentators. And thirdly, that actually a lot of those bearish narratives are quite challenging. So our situation right now is that we talked about geopolitical risk last year. Markets have moved since then. Very positive year in 2025 in spite of all of that. So right now we are diversifying some of that risk. We still believe in equity. We're looking very much at the value style of equity as well, and we believe there's plenty of opportunity out there, but it is more nuanced. And there will perhaps be a correction at some point, but with the diversification that we're encouraging for our clients, we believe that will protect them and see them through.
Closer to home, the treaty will create greater frontier fluidity for goods and people. But what does it mean for local banking institutions like Trusted Novus?
I don't think it has a direct impact on the bank. That said, obviously it impacts our customers. We have customers in the retail sector, we have customers in the corporate sector, and also we have customers in wealth management as we are aware. So we'll be very interested to seeing the text when it finally comes out next week. I'm sure that everyone's expectant to see that. And then we'll be making an assessment as to what impact it may have directly on our customers, which indirectly we will have to analyze and assess as to how we adapt to that treaty.
Well, markets love stability, and if the treaty brings stability for investors, and given the fact that we believe Europe is ripe for acceleration at the moment, and we think there are plenty of opportunities there, then that is a coming together of positive forces.
So what's the bottom line for investors?
Well, I think the temptation for many people in times of volatility is to head to cash, and I understand that. It does depend on personal circumstances. But for those people who still need growth, Ros, for those people who have a long-term plan in place with a partner like Trusted Novus Bank, then think in the long term. And it's challenging, and it requires a behavioural discipline, but that is the law of investing. And that was how I would remind clients to think.
It's a cautiously optimistic message, with resilience in global markets appearing to be outweighing bearish narratives. But no doubt investors will be watching the scene very closely.